This is a daily market comment by Marios Hadjikyriacos. I'm Christina Marujos, and thank you for joining us at XM.com. It was a very quiet session for financial markets, with most major currency pairs trading in tight ranges and ending little changed overall. Stocks retreated a little, with the S&P 500 shedding 0.32%, but remaining within breathing distance of its record highs. The next source of volatility will probably be the Fed policy decision tomorrow. Rate cuts are off the menu, hence all the action will come from the new dot plot with interest rate forecasts, and the question is, will the new dots signal one more cut next year or not? Given the resilience of the U.S. economy, the already enacted rate cuts, and the somewhat rosier outlook for trade, the answer is most probably no. With markets still pricing in a full rate cut by November 2020, a dot plot that shows an unchanged federal funds rate next year could come as a hawkish surprise, and by extension lift the dollar, but weigh on stocks a little. The British pound briefly popped higher yesterday, as election polls show the Conservatives maintaining their substantial lead, bolstering hopes for a majority government. Cable surrendered most of those gains later on, but continues to trade near its recent highs, as a Tory majority is now clearly the market's baseline scenario. However, this creates an asymmetry in terms of the risks surrounding sterling. If the Tories win as expected, the pound could still jump, but any gains are likely to be smaller in magnitude compared to the losses the currency may record on a hung Parliament outcome. UK GDP data for October are due today, but a more impactful announcement will probably come from YouGov, which will release its final model-based poll at 10 o'clock GMT. It was last released a few weeks ago and showed the Tories gaining a respectable majority. If the same is true today, the pound could extend its recent gains, but any suggestion of a hung Parliament would likely generate a much bigger downside reaction. This was today's Daily Market Comment here at XM.com.